Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the review of the December 2023 inflation numbers and expectation. Last week, the National Bureau of Statistics (NBS) released the Consumer Price Index (CPI) report for December 2023. The Consumer Price Index (CPI) is used to calculate inflation as it measures the average change over time in the prices of goods and services consumed by people for day-to-day living. Based on the report, inflation rose to 28.92% year-on-year in December 2023, its highest level since the rebasing in 2009, from 28.20% year-on-year in November 2023. The 2023 average inflation rate settled at 24.5% versus 18.8% in 2022. Similarly, on a month-on-month basis, inflation was higher at 2.29% versus 2.09% in November 2023. The continued rise in the inflation rate can be attributed to the higher fuel prices, over 2,000% increase year-on-year to 671.86 naira in December 2023, significant devaluation of the naira down 49% year-on-year to 907.15 naira per dollar, and rising insecurity in major food-producing areas. The food and non-alcoholic beverages 15%, housing, water, electricity, gas and other fuel 5%, and clothing and footwear 2% divisions ranked top in the contribution to the rise in inflation in December 2023. Food inflation, which is the biggest driver of headline inflation, contributing over 50% to the CPI basket, reached 33.9% year-on-year, up from 32.8% in November 2023. This was largely due to the higher cost of PMS, which increased transportation costs and was passed on to consumers in form of higher food prices. Also, the food inflation sub-index reflects the impact of insecurity in food-producing regions, festive season demand, and persistent infrastructural bottlenecks. Similarly, core inflation, which removes the impact of farm produce, rose to 23.06% year-on-year from 22.38% year-on-year in November 2023. On a month-on-month basis, core inflation rose to 1.8% in December 2023 relative to 1.5% in November 2023 due to further depreciation of naira at the official 8% to an average of 896.42 naira per dollar, and parallel markets 5% to an average of 1,210.55 naira per dollar. By states, Kogi 35.9%, Lagos 32.3%, and Rivers 32.2% had the highest headline inflation rates year-on-year in December 2023. We expect the inflation rate to remain elevated, albeit at a slower pace as a result of the base effect due to higher inflation rate last year, relatively stable energy prices, and reduced volatility in the exchange rate. As a result, we anticipate a slowdown in inflation in January, though only moderately to 28.8% year-on-year due to the high base effect. The month-on-month inflation is projected at 1.8%. It is important to note that accelerating inflation and a persistent decline in the value of the naira impacts your investments. Therefore, it is advisable to have a diversified portfolio with a sizable portion of your investments in dollars, fixed income and stocks, high-yield fixed income naira products, good-rated commercial papers, and resilient Nigerian stocks. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.